Good morning, everyone. This is Rana Ifat Parveen, Academic Coordinator of MBA Department. I'll be hosting this FDP program. A very warm welcome to all our participants as we enter the third day of our 5-day faculty development program on taxation and society, charting the intersection of policy, philanthropy, and development. We hope you have been gaining valuable insights from the session so far. Today, we are set to explore a highly relevant and emerging topic, that is taxation of digital assets in India, with the increasing adoption of digital currencies, non-fungible tokens, that is NFTs, and other digital assets. Understanding their tax implication has become crucial for both professionals and enthusiasts in this field. To guide us through this complex and contemporary subject, we have with us Professor Shailesh Kumar Dubey, sir, a distinguished academic and professional with extensive expertise in finance and accounting. Professor Shailesh Kumar Dubey, sir, holds a postgraduate degree in M.Com Finance Honors and is currently pursuing a PhD from Arka Jain University, Jharkhand. He has qualified the UGC NET in Commerce with an exceptional 98.41 percentile. In addition to being an Associate Company Secretary, ACS, and having completed Final Group 1, CA Final Group 1, Professor Dubey is also a certified TAP FICO trainer. With over 7 years of teaching experience at esteemed institutions like XITE Gamaria Autonomous College, ICA EduSkills, and currently Arka Jain University, combined with a decade of industrial experience in finance, audit, and taxation, Professor Dubey brings a unique blend of academic knowledge and practical insights. His expertise spans across various aspects of finance and accounting, making him a sought-after educator and consultant in these fields. In today's session, Professor Dubey will delve into the nuances of how digital assets are taxed in India, discussing the evolving regulatory framework and its implications for individuals and businesses alike. As the digital economy expands, this topic is becoming increasingly pertinent, and we are fortunate to have Professor Dubey's guidance to navigate these complex waters. We are confident that today's session will be both informative and engaging, offering participants a comprehensive understanding of the taxation landscape for digital assets. So, without further add-ons, please join me in welcoming Professor Shailesh Kumar Dubey, sir, to take us through the vital session. Over to you, sir. Welcome, sir.
So, good morning, one and all, and thank you for the opportunity to speak to you today about a topic that is increasingly relevant to our rapid evolving digital economy, that is taxation of digital assets in India. As we navigate the complexity of the world driven by technology, we are witnessing an unpredictable rise in the digital assets, including cryptocurrency, NFT, and other blockchain-based investment. So these innovations present exciting opportunity, but also signifies challenges for policymakers, regulators, and tax authority in Indian context. So let me share my PPT to you. Sir. Hello, it is visible to everyone? The screen is visible to everyone? It is visible now?
Yes, sir, it is visible. It is coming.
Okay, sure.
मैंने अपना बेस्ट अटेम्प्ट किया सबसे पर्सनली रो रो के बोला कि पेमेंट करो इतने कर सकते थे
आपका सेक्शन
मैम सेक्शन बी सेक्शन बी
कौन कौन से बच्चे जो तंग ज्यादा कर रहे हैं?
मैम इस सारे बच्चों जिनका टिक लगा है उन सबने पेमेंट कर दिया है बाकी
मेरे पास ये वाले रह गए हैं सेक्शन बी के इनके बताओ क्या स्थिति
सेक्शन बी में
यस प्लीज
ज्यादा बच्चे होंगे ना टोटल डिस्ट्रिक्ट
ये नॉट पेड वाले बच्चे हैं बेटा इनमें से कौन सा बच्चा जो ज्यादा स्टबर्न है
हमारा नहीं है हमारा लिस्ट नहीं है और देखो पास है
बीकॉम पास का खाना होता है
इसे वही बोल रहा हूँ कि बच्चों ने पेमेंट कर दिया बाकी
अब वो तो वो नेहा मैम मेरे को फाइनेंस के लिस्ट है
I am audible to you. So, we are different investment opportunities. Like there is an orthodox method of creating wealth through FDs and creating wealth through uh, real estate. But in today's market scenario, the scenario is completely changed towards digital assets. And India is now far behind to compete with this challenge. Most of digital assets is not regulated by India, and it is in the world forum. So first of all, we need to understand the digital assets. What is digital asset? So digital assets by their nature defy traditional financial categorization. They operate outside conventional banking system. Like there is no currency like Indian currency or INR, enabling peer-to-peer transaction on a global scale. By this foster innovation, it also complicates regulatory framework and taxation policy. The lack of clarity surrounding digital assets had led to the sense of uncertainty among investor, business, and even tax authority. So, moving forward, the digital assets is having three categories like cryptocurrency. We all know there are different type of cryptocurrency, Bitcoin, Euro, and other countries are providing different type of cryptocurrency for their currency transaction, and it is fully secured and automated. And other thing is NFT, non-feasible tokens, which is also is running on the same technology of blockchain. So moving forward in Indian context, we have to see the previous budget of 2020 to 23 that is related to Amrit Kal forecasting, and there are four priorities related to everything like PM Gati Shakti, inclusive development, green financing, and all the things are there. But in Union Budget, Article 112 suggests that we need to have the regulatory framework related to digital assets taxation. So now the Indian government want to know what is digital assets and how we going to tax it in the Indian context, because there is no mechanism till now. And at 2020 to 23 financial year, when the budget conveyed by the finance minister, present finance minister, Srimati Nirmala Sitharaman, she told that she want to regulate this market, but didn't have any regulation. So she impaneled a taxation policy related to digital taxation in the union budget itself. So without not having any regulation, the government only want taxes related to digital assets. If you are transacting in digital asset, government uh, need to earn the taxation revenue from it. So till now, budget is not clear about digital assets. And at that statement, RBI governor also suggested that we have to create our own digital asset currency through RBI, which can be easily generated and and used in our transaction in day-to-day basis, like we are using currencies. So moving forward, digital assets include cryptocurrency, token, and other form of digital representation value. So there is a underlying asset concept behind the cryptocurrency generation. Underlying asset means ki, like if you want to generate any assets, you need to connect or you need to assign other asset to generate that value. Like if you want currency to have value, then RBI is taking the liability in every note and every currency. RBI is claiming that every liability of the notes toward the RBI, and it is there. For that digital asset, you need to also have any underlying asset. So there are total three types. The first one is related to cryptography, that is related to cryptocurrency. The second one is non-fungible token. And third one is anything else, the miscellaneous currency like commodity trading and other things, which can be truly or which can be easily converted to cryptocurrency thing. So this is all about digital asset, virtual digital assets. Government is having a provision of taxing digital assets under different heads. So under budget is or what is currency thing. So cryptocurrency can be mined, can be buy, or can be work as a legal tender. Mining means it's a kind of generation or generating cryptocurrency by encrypting or decrypting it. Second one is buying. You can easily use currency like RBI is manufacturing or RBI is creating notes like 500 note, 2000 note, 100 note, 200 note. So RBI is creating, RBI is mining that note in easy term. Then we are the users, we are using or purchasing the currency or creating the value. And third one, we are using it as a legal tender to buy any commodity or purchase anything uh, accordingly. But in India, mining is illegal. Like mining, it is a process where an individual miner uses a personal computer to solve the complex algo codes transaction along with the shorting them. As a reward, the miner gets new cryptocurrency, which is nothing but a creation of mining of cryptocurrency. Means there to protect the mining or to manufacture any cryptocurrency, you are having an underlying cryptocurrency to protect that thing. So it is highly secured and anyone cannot easily break the codes. So it is only encrypted by the sender and the receiver. Then second one is buying. So buying of cryptocurrency from currency exchange against real currency and store them in an online currency wallet. Like till now we are using different wallet like Paytm wallet, PhonePe wallet, or any Google UPI payment wallet we are having. We are having our cash or payments in digital form. Apart from having currencies in banking system, we can use that UPI transaction. So cryptocurrency is also having a wallet. If you want to trade in cryptocurrency, there are many stockbroker like Angel One, Zerodha, and other companies are providing that facility. You need to update or you need to activate the thing only. And third one is as a legal tender. So businessmen accept cryptocurrencies instead of real currency as consideration for sale of goods. So Indian buyer or Indian exporter or Indian importer can use the cryptocurrency to pay anyone from outside India or to collect cryptocurrency. It is also available. But mining is not applicable in Indian context because government is prohibiting the mining concept. So anyone want to manufacture any cryptocurrency from India, it is illegal now. In financial year 2020 to 23, the government suggested that he want to issue new cryptocurrency by the banner of RBI. So till now it is in dilemma or it is in confusion that who need to create or who need to give notification related to cryptocurrency generation. So till now mining is prohibited. So it is a criminal offense in India. Any question related to this particular thing?
Sir, can you explain again the process of mining?
Mining. Okay. Mining means it's a kind of manufacturing. Like we are creating wealth through currency, or we are creating wealth through real estate. So it is legal in India. You can buy or you can have money or currency, and you can use it as a purpose. So till now, RBI is creating the currency. We can create our wealth related to it, and it is also legal. But in case of cryptocurrency, no one can create any kind of code related to cryptocurrency that is also related to underlying assets. Mining means manufacturing of cryptocurrency. Clear?
Okay, sir. Thank you.
So we cannot create cryptocurrency. Now moving forward, now we need to see the market, because Indian government or anyone from India till now or up to that time, they not want to create anything else when they are not seeing any worth of it. So Indian government need to know about the uses and significance of cryptocurrency first. So in economy value addition, till now total 184 billions in the forms of investment and cost saving tools are used under cryptocurrency. The NASCOM has recently said that Indian cryptocurrency market has been growing exceptionally over the last few years, and it expected to reach up to 241 million. So it is having the potential of 20 times growth, and up to 2030 the Indian market will grow globally as cryptocurrency. So government need to form or regulate the crypto market, and we need to know the adaptation of cryptocurrency which the world is going to take. So like we have GST to compete with other countries, because before GST there are many number of taxations are there. In case of indirect taxation, there are custom tax, excise duty, entry tax, operator tax, manufacturing tax, service tax. So these are different types of taxes. So we converted in 2017 the whole taxation into GST. Now we need to subsum the whole rule related to cryptocurrency in one frame, which is issued by RBI and governed by Finance Ministry under Indian government. So this thing is having the potential. So cryptography, the modus operandi related to cryptography or generation of cryptocurrency is a basic thing, but it use a expert algo thing like coding. It is more scientific. We cannot easily issue this scientific context. Like cryptography is the study of secure communication techniques that allows only sender and intended recipient. So there is no loophole related to or breach of thing related to this channel. If you want to say hello, you need to highly crypt it or create a code related to saying hello to anyone. So decryption is the other policy. So you have a strong mechanism to hold that thing. So basically cryptography is related to encryption and decryption of a code with underlying assets. I'm repeatedly saying that underlying assets means cryptocurrency is having certain value related to some asset. It signifies the value of certain asset with the coding thing. So that is all about cryptocurrency or cryptography. Now moving taxation in India. So if you are a finance person, you know these taxation like income from salary, income from property, income from capital gain, and income from other sources. These are the total 5 heads of income under Income Tax Act 1961, and we need to know where we are going to tax cryptocurrency gain or cryptocurrency profit, or where we can use cryptocurrency losses to adjust. So one by one I am completing that portion where we are going to tax cryptocurrency. So in salary, being cryptocurrency is not regulated by government as legal tender, employee cannot use crypto to pay salary. If any employer holds any cryptocurrency, He cannot tell that I want to send any cryptocurrency in the name of salary to employee. It is totally illegal in India. You cannot use to pay salary. If your employee is in abroad, like if you are having a multinational channel in operating different country like USA or other country, you can easily use cryptocurrency to pay salary. But in India, you cannot use. So for that country who are having different setups in other countries can use. Then house property. So any rental payment cannot be go with cryptocurrency in case of house property. And in the same case, if you are having any house property in abroad or you have rented any house property in abroad, income cannot accept cryptocurrency, so it is not taxable under income from salary or house property. Second one is business and profession. So businessmen can pay for import or export, receive currency from export and pay currency from import in case of cryptocurrency. But in case of Indian trading, if you are a supplier or consumer or customers are Indian based, having Indian base, so you cannot use cryptocurrency to pay that. Third one is capital gain. So the taxation is under capital gain. Cryptocurrency is not defined as a capital asset, but it is covered under digital assets. So in 2020 to 23 budget, it is not clear where to tax it. But in 2023-24 budget, it is very clear that we have to tax the cryptocurrency gain or losses in capital gain head. So capital gain head is related to any kind of sale of capital asset, whether it is having any underlying value like digital assets or cryptocurrency or any NFT. So you are going to tax the capital gain, all the capital gain portion in capital gain part. And government is very curious about charging taxes under this head. So if you have any cryptocurrency worth rupees 100 rupees, 10 rupees or 1000 rupees, if you buy or bought any cryptocurrency, you need to disclose this in the digital assets under capital gain in the current return filing. And if you don't want to show the cryptocurrency purchase or transaction in your ITR, then it is going to be defected. In my consultancy service, I saw many clients having the same problem. They had invested in crypto, don't want to show it. But government is very curious or having the eye on cryptocurrency market. Then if you had bought any cryptocurrency worth rupees 10 rupees or 100 rupees, government is going to charge, and government wants a full disclosure from your end. So it is going to be taxable in capital gain, but it is not going to be taxable in case of other sources. Like if you are winning a lottery income, the lottery distributor cannot send your winning amount into cryptocurrency. It is not applicable to that. Moving forward, with taxation purpose, the scheme of taxation of digital assets, the tax rate is applicable on virtual digital assets is 30%. It is likely to be taxed at a higher rate of maximum marginal rate of 30%, further extended with TDS rate of 10%. So the highest rate of taxation is 33.33%. And in the present, or if you are going to trade in cryptocurrency, the current taxation related to TDS is at having a rate of 1% of the total monetary value of transaction. So with the practical example, we can easily understand the whole topic or whole concern related to taxation of 30% and 1% of TDS. This is all about income tax. And apart from income tax, government want to tax the crypto market into GST also. So till now, there is no GST on selling or purchasing of cryptocurrency. But in future, we can see the taxation of digital assets under GST. So moving forward, so there are two types of taxation in income tax. First, you you to charge 30% of taxation of income of your digital assets income. And the first one is prima facie when you are doing any taxation related to TDS, that the rate is 1%. Suppose I want to sell my cryptocurrency having the worth value of 5 lakh rupees. So I at the time of selling that property or selling that currency, I need to pay 1% of the whole value. Like 5 lakh rupees is my value, so 1% is the rate of TDS. So I instantly going to pay TDS at the rate of 1% related to my crypto transaction. And after paying 1% TDS, I can claim that TDS payment into my self-assessment tax or TDS payment. And at the end, when I am going to file my return, I need to pay 30% TDS. So with the practical example, suppose cryptocurrency investment is 5 lakh rupees and sale consideration of cryptocurrency is 6 lakh 25,000 rupees. So your purchase price, buying price is 5 lakh rupees and your selling price is 6 lakh 25,000 rupees. So your net profit is 1 lakh 25,000 rupees. So for your net profit, you need to pay 30% of TDS of 1 lakh 25,000, but you need to pay 1% TDS based on your transaction value, that is sale transaction value. So 6 lakh 25,000, the 1% TDS rate is 6,250, and for 30% tax rate is applicable on your 1 lakh 25,000 income. So you need to pay 37,500 for your whole transaction. But in earlier, at a time of transacting through cryptocurrency or purchasing any cryptocurrency, you need to pay 1% of the total amount of transaction value. Like 6 lakh 25,000 is your total transaction value, selling value. You need to pay 1% of that transaction value. That is 6,250 you had already paid. So you need to adjust it with 30% tax of 37,500, and you need to pay net balance of 31,250. So that is a scenario related to profit earned through cryptocurrency or digital assets. Any question related to it? So TDS is charged on total value of transaction, that is sales value of 6 lakh 25,000, and 30% is the tax rate is on virtual digital asset, which is taxable under capital gain. So 1 lakh 25,000 is your total income related to digital assets. That is 1 lakh 25,000, 30%, 37,500, and 1% of TDS of sale amount is related to your total sales value. So you need to only pay 37,500 of this transaction. And additionally, you need to pay education cess, that is health and education cess, at the rate of 4%. But this is related to profit scenario. But what is the case when we are having losses? So there is a basic comparison between gain and loss. So in previous example, the selling price is 6 lakh 25,000 and the purchasing price is 5 lakh rupees. The total gain is 1 lakh 25,000. The TDS is applicable on the sales price of 6 lakh 1,000. That is 6,250 at the time of sale. And the tax on capital gain is 30%. That is 1 lakh 25,000. So the net taxation paid by you is 37,500 after deducting 6,250 from TDS and subject to surcharge. But what if you have lost? Suppose I have a buying value of 5 lakh of cryptocurrency and the selling value is 4 lakh 50,000. The loss is 50,000. So TDS needs to be deducted from selling price. So 4,500 is deducted at the time of sale of that cryptocurrency. Because you are not earning any gain from cryptocurrency, so the 30% capital gain is not applicable in that scenario. At the time of filing your return, you can easily claim or have the refund through income tax. And for individual, you can file the return up to 31st July. For this financial year, you can easily file your return up to 31st July 2025. And for the previous financial year, the date has been crossed. you have the chance to file that return up to 31st December by paying penalty. So if anyone is having any losses from cryptocurrency and at the same time they had paid TDS at the rate of 1% at the time of selling, so they can easily claim the refund. So this is a scenario of profit and losses. Any question? Any question? So moving forward, short-term capital gain or long-term capital gain. So there is a time period of 36 months. If you hold a cryptocurrency up to 36 months and you sell before having the holding period of 36 months, that it is called as short-term capital gain. And if you hold for more than 36 months, then it is long-term capital gain. So short-term capital gain is having different tax rate and long-term capital gain is having different tax rate. But till now, there is a rate of taxation of 30%. If you had short-term or long-term, you need to file or pay 30% tax related to digital assets. So digital assets. So there is no differentiation between short-term capital gain or long-term capital gain. So regulatory framework. At the starting, I had told that government need to frame regulation related to cryptography or cryptocurrency, but government is not having any regulation or any act related to frame this. Government is only taxing the cryptocurrency or digital assets at the rate of 30% and TDS rate is 1%. But government don't want to create any regulation. So government want the benefits of cryptocurrency while charging taxation, but don't want to create a regulatory framework till now. So after charging the direct tax income tax, government want to tax the cryptography market into GST. So it is better to avoid investing in cryptography if you're not having knowledge in cryptography, because government don't want to create any regulation but want to charge taxes. Then GST implication. Uh, I think government want to charge cryptography at the rate of 18%. Till now, the finance ministry notified the rate of taxation, but the charging date is not clear now. When they are going to start the taxation under GST of cryptography, but they notified they want to tax GST on cryptography. So we have to wait what is the rate, like 18% or 28%, but on an average 18% is the rate going to be taxed for cryptocurrency. So at last I want to say the thing which is very important. So we need to look the way forward to build a robust taxation framework for digital assets. We must consider two key strategies, because the world is accepting cryptography or cryptocurrency because it is more stronger value creation. We are moving out. We all know there are too much fake currency we are seeing in the Indian market. So first and foremost, we have a clear guideline to mitigate the challenges related to this. So the government should provide clear guidelines that define digital assets, their classification, and the specific rule for their taxation. This will help eliminating the difficulties related to compliances and foster the economic growth. Second one is continuous dialogue. Engage with the stakeholder, like if you want to purchase, if you are a customer or if you are a trader, the government need to include industry expert, tax professional, and crypto community will be crucial in developing policies that are both effective and adaptable. Third one is technological integration, embracing technology for tracking transaction and implementing the tax compliances can enhance transparency and efficiency. So blockchain technology, it is very useful and crucial for Indian government to take or tackle these challenges. Then fourth one is education and awareness, initiative to educate both taxpayer and tax officials. So these are the recommendation to government on my behalf. And at last, I want to say the taxation of digital assets in India is a dynamic and evolving issue. As we move forward, it is an essential that we adopt a balanced approach, one that one that encourages innovation while ensuring fair tax contribution. By fostering an environment of clarity, collaboration, and adaptability, we can harness the potential of digital assets for economic growth and prosperity. So thank you for your attention. And if you have any query related to it, I, I will answer it. Thank you.
Sorry, there was a network issue. Thank you, Shailesh sir, for giving us information about today's topic on taxation of digital assets in India. Um, The topic briefly concludes that the taxation of digital assets in India, particularly cryptocurrencies and NFTs, is a critical emerging issue. And the government introduced, I think the government also introduced a 13% tax on income from virtual digital assets in the 2022 union budget, with no deduction allowed other than the cost of acquisition and all. So, and also a 1% TDS, I think, on transaction was also imposed to track digital asset activity. So, this regularity in the framework aims to curb illegal transactions and also boost revenue collection. So, the digital assets, the popularity of it grows, and therefore the clarity in this topic regarding taxation on digital assets will be essential for our compliance and innovation. So, thank you very much, sir, for enlightening us towards this topic. If anybody has any question, they may ask, sir, regarding it.